Now, Iranian authorities dealing with unrest. Demonstrators have taken to the streets in Tehran protesting against the state of their country's economy and the collapse, of course, of the local currency, the rial. Traders from the Grand Bazaar joined the rallies, essentially shutting the marketplace. Iran is also feeling pressure as foreign firms shy away from the country following President Trump's withdrawal from the Iran nuclear deal. Now, I'm joined once again by Aarthi. She's the vice president for banks and financials at Shuaa Capital. And of course, there is a sense, isn't there, that Iran is really, the world is really closing in on Iran, because you have these comments over the last 24 hours from President Trump. Nothing new there. But of course, also, when you look at it within the context of the region, the countries, Saudi Arabia, the UAE in particular, Iran wasn't able to make much headway at that OPEC, non-OPEC meeting, especially with listing the idea of U.S. sanctions hurting Iran, on the official agenda. What's your take there? Because it seems as if the Iranians are losing ground in terms of how much they can really push back here.
I don't think they can. I mean, it again depends on how and what shape or form this whole sanction will take place by the end of this year. We still have a feeling that maybe the EU's and China might not actually support or compel with the sanctions of the president, which then means that there might not be as much of an impact as what the market is actually feeling. It could just be a slightly less off the curve in terms of their oil production decline, which can be easily offset by the rest of the people.
I think Nancy has another question.
Hi, Aarthi. And yes, all of this we're talking about items that are within OPEC's control. You still have the U.S. factor when we look at the crude inventories in the U.S. too, constantly being drawn down here. The reality is that demand stays very strong.
Exactly. I guess the bigger question for oil is the reason why it's going to stay at $70 and above is because demand is extremely strong, and the supply curve will definitely tighten, or could tighten even more if there is if the Venezuelan crude production is going to decline from the current levels of 1.5 million barrels per day, which is already 500,000 below the OPEC target. So when you're going to see more of a decline from the Venezuelan oil curve or oil production, that's going to put supply more tighter.
So is it your expectation, too, that demand will stay this strong, even in light of what we're seeing on the trade front here? Because some voices are saying, wait a minute, if these trade tensions escalate from here to an outright trade war, which not everyone is predicting, we should say, that could see a dent in global growth going forward.
It might definitely have a minimal or a slight dent, but I don't think it's going to be very substantial for the demand outlook to be very bearish. We don't have a reason to think that way going forward.